Hey, good afternoon, everyone. Thanks so much for joining us today. My name's Aaron Clark, and today we're going to talk about annuities. I've done this webinar now for a handful of groups, and I wanted to get it out there again because right now we're kind of got the perfect storm for annuities. I've been doing this for about 23 years, folks, and I will tell you that in my career, I've never seen rates in annuities as high as they are right now. So that tells me something. They're flying off the shelves. We're having conversations with people every single day, with clients, with agents. Your clients are buying these, and we would much rather they buy them from you. So today we're going to give you some information and share some ideas on how you can ask a few questions and kick the doors open to some sales that you may not have gotten in the past. If you don't specialize in annuities, but you want to work with them, give us a call and let us teach you a way that you can implement them into your practice. You don't have to be the expert. If you are the expert, give us a call anyway, and we can help you with maybe some sales ideas that you've not heard of before. We like to call that iron sharpening iron. Sometimes a couple of agents taking some ideas and put them together and turn into something new or something, a unique way of positioning something. So we're here to help you. We want to help you grow your business and take your practice to new levels in 2024. So with that, we're going to kind of just jump in, and I want to get you excited about talking about annuities because they're not what they used to be. They've changed a lot over the years. They've changed a lot in the last 2 years, and we're going to highlight some of that today. So if we just take a look, by definition, what is an annuity? Well, in its basic form, an annuity is really nothing more than a savings account issued by an insurance company. There's several different kinds of annuities, but the kind we work with, they're very safe, and they also provide growth opportunity. But the neat thing is they'll do it on the same dollars at the same time. It's sleep insurance, folks. I don't know how long all of you have been in this business, but I was in the business back in 2007 and 2008 when the market dropped by 40%, and people didn't like that. Well, annuities are sleep insurance. And they're most likely not what you think they are. I mentioned just a few seconds ago that they've changed a lot over the years, and we're going to talk about that today. It's a great place to provide a guaranteed monthly income, and there's so much more that they can do. So we're going to talk about some of these things today. Take notes. Think about people you can go out and talk to after this call. We want to help you, drum up business and get some ideas out of this and turn it into something for you. So if we take a look at really, how does it work? How does the annuity work? This graph represents the market, and it shows from 2001 to 2022 what the stock market actually did. This red line on this graph is the actual S&P 500. And you look in 2001, it started going down, then it went back up, and then we see the crash in 2008, kind of over here, and then it starts going back up and back up. And here we are now at 2021 when it's at its very highest point ever, and then it drops in 2022. Well, think about right here, if you're getting ready to retire, you're 65 years old and you've got a portfolio worth a couple $1 million or whatever it is, and then the stock market drops by 40%. And you're 65 years old and you were going to retire, but now you're not. Because why? The stock market just took 40% of what you've been saving for. Well, what if there's a way that you could take that downside out of play? And there is, folks, and that's what we're selling today. And that's this navy blue line. This is our indexed annuity. So if you follow this, the very first thing I'll tell you in indexed annuity is, like the market, you don't get all the upside of the market in an indexed annuity. You don't get all the upside. There are caps. But the trade-off for that is you never have any of the downside. So again, if we follow this navy blue line, we're seeing that when the market goes down, you're protected. It's flat. And when the market starts going back up, see this big gain right here? Well, we're not going up as fast here. So you're not getting all the upside of the market. Then when it goes down again, we went flat. And then here we are. So we follow this navy blue line all the way out here to 2022. And when that market tanked, the 65-year-old had that couple $1 million portfolio, and they're thinking about retiring, but now they can't. Well, guess what? They still can because they didn't lose. This is one of the most powerful marketing pieces our industry has, folks, because it tells the entire story of how an annuity works. It gives clients what they want. It gives them the opportunity to keep up with inflation. It gives them the opportunity to keep their money safe, but it also helps them grow it. Now, if we take a look at all the places we can park our money, the one thing I will say is everything's a compromise. In order to get some of something, we have to give up something else, right? Just like a CD, for example. If you want to have ultimate safety, you can go into a CD and you're safe, but the trade-off or the compromise is you've given up opportunity for growth and you're not particularly liquid. You can go into the stock market and you can have that opportunity, you can have that liquidity, But remember that previous slide when I showed you 2001 and 2007 and 8, you've given up the safety if you go into the stock market. What about an annuity? Well, again, they've changed so much that now you can have safety and opportunity on the same time, but your trade-off there is liquidity. So you're not 100% liquid 100% of the time. That's not necessarily a bad thing, but we'll talk about that as we go. But the goal here is we want to try and take all of these different places we can park our money, and we want to limit the amount of compromises that we have. And I believe that the index annuity can do that, but we'll keep going a little bit. And everything is a compromise, but it doesn't necessarily have to be. What we want to show you folks is by simply taking our money from our left pocket to our right pocket, we can get rid of fees. We can take volatility out of play, like I mentioned earlier. We can get rid of inflation because Warren Buffett says, the best way to fight against inflation is to not lose what you already have. And then we talk about taxes. Well, you only pay taxes on annuities when you take the money out, so you've got control over that. I mentioned on the previous slide, we've got safety and opportunity for growth on the same dollars at the same time. We talk about liquidity in the annuities and how they lack them. I always tell folks, many times if you're going to take me up on all the liquidity that our annuity will provide to you, you're probably going to run out of money before you run out of life. But in most of our annuities, you have the option for 10% penalty-free withdrawals after the first year. Some annuities, you can actually take out penalty-free withdrawals in the first year. And then there are some carriers now that are only offering 5% penalty-free withdrawals, but a lot of times those are cumulative. So you're able to, if you don't take out 5% in 1 year, for example, you could take out 10 the next year and 15 and so on. And then what about growth? Well, I had a mentor once tell me that moderate gains over time will outperform a volatile market. That's why in an annuity, you don't have to go out and chase the 10s and the 12% because 5 to 7 or 6 to 8% over time with no losses is going to outperform a volatile market, folks. So that's why we see folks fleeing to the safety of the annuities, because it gives them that peace of mind that they want, but it also allows them to continue to grow their money. So why? Well, we want to protect against the risk. We got to keep your money safe, especially if your clients are nearing retirement or already in retirement. When you're no longer earning a new paycheck, it's very difficult to replace losses with new earnings. We're going to give your client the upside potential with no downside exposure. They can grow their money. Lifetime income, folks, we're going to show you here in a minute how your client can put money into this account and they can take an income at some point that they can never outlive, even if their account value goes to zero. When I got into this business 23 years ago, people that were seniors back then had two big fears. They were running out of money and going into a nursing home. And today we have products that can hedge against both of those. So the second one, I just mentioned the lifetime income. The second one, long-term care payouts. Most of these policies have doublers. So if they're taking an income stream, and let's say it's paying them $15,000 a year and they need it for care, well, that $15,000 will turn into 30 and it'll pay it out for 4 or 5 years and then it reverts back. So there is some opportunity to have some help with long-term care or medical pay for those types of expenses. You've got tax deferral on non-qualified products. Take advantage of creating interest on money that's normally taxed, like in a CD. Tax deferral is huge, folks. You're going to get it anyway on an IRA, but when you compare taxed as earned versus tax deferred, an annuity is going to blow a CD out of the water every day. Fixed account option. You want some guarantees? Look, all of these annuities we have options where you can allocate into various indexing strategies. But if your client says, look, I'm not sure I like that, or I feel like the market's going to tank, or what about right now? Right now, if you turn on the news, it's scary. The stuff going on across the pond is crazy. We've got an election year. A lot of folks are just going to the fixed account saying, hey, I'll take the guarantee for 12 months. They can reallocate on their anniversary if they want to. And then the other cool thing is the entire account value is payable upon death. The full account value goes to the beneficiaries. There's no probate or anything like that. It's a relationship between the insurance company and the client. What about objections? Well, you're going to hear that I don't want to tie up my money. Well, what's the purpose of the money? Folks, ask your clients that. I ask that question in every single interview I have because the purpose of the money dictates where I put it. If I've got a 50-year-old and I'm working with their IRAs and they're not going to need it till they're 65, well, a 10-year annuity might not be a bad thing. We just need to figure out how much liquidity do they need. You're going to hear about Susie Orman and Dave Ramsey. They say annuities are a terrible place to park your money. Well, Susie Orman and Dave Ramsey don't know what they don't know. If I had as big a platform as they did, I could spread the message real fast that annuities are not what they used to be, folks. And it takes education to understand how much they've changed. You might hear, my agent's only selling you an annuity because of a big commission. Well, the reality, folks, is financial advisors make about twice the amount that we make. The difference is we're just paid all up front. But call me on those, and I can help you folks address the big commission question there. Low interest earning ability. You're going to hear that one as well. I'm going to show you folks on another couple slides here. But clients today, they're earning north of 10%. It can happen. We would never have those conversations in the past, but today those returns can be real. I had a client a few years ago that earned over 19% in one of her annuities, and it's not a variable annuity. You don't have to take risk to get those. Is it going to happen all the time? No, but every once in a while, you're going to have the opportunity to hit it out of the park. You don't get all the upside of the market. If there's any negative about an index annuity, maybe it's that you don't get all the upside of the market. But the reality is nobody's getting all the upside of the market anyway. We've got in annuities, we have caps, participation rates, and spreads. And basically what that means is you're not getting all the upside of the market. So for example, one of my favorite annuities right now has a 10% cap on what's called an annual point-to-point strategy. What that means is your client gets everything between 0 and 10%. If the market goes up by 11, your client gets 10 because that's their cap. If it goes up by 6, they get 6. But if it goes down by 10, they don't lose. So that's huge. Again, folks, the peace of mind, that's why clients are buying these. What about income riders? These are huge, folks. I mentioned earlier that clients have two fears going into retirement: running out of money and going into a nursing home. Those fears still exist today. Your Fidelity, your Edward Jones guys, your brokers, they're all good at growing your money and losing it sometimes as well. But the one thing they can't do that we can is we can guarantee an income. How does that work? Well, I just explained to my clients, it's like a car with two engines. You've got one in the front and one in the back. They're both working. It's one car, but they're both working the same time. Again, it's that guaranteed income for life. And I talked about earlier on the other slide that, if they can't do 2 out of 6 activities of daily living, then we can accelerate that for care as well. All right, so here it is in action. I want to take a look at this just for a second to show you what this income stream can look like. So this client is 7 years old, and they put $100,000 in. Now, I don't know what this annuity is going to do over the next 10 years, but I can tell you what it did over the last 20. And if someone had bought this annuity 20 years ago, and it would have been in this strategies, it would have earned on average around 9.61%. It's not going to do that. It's either going to do 8.5 or it's going to do 10. But this is just kind of an idea to show you what it has the potential to do by using these strategies. Well, you can see your account value is growing over here, and 10 years out, you've got $250,000 of cash. If we look over here to this column where it says lifetime income, if your client said at that point in time, hey, I want to turn on an income, they could turn on an income stream of $16,265, and it would pay them that every single year as long as they live, even if this $250,000 went to zero. Huge. Now, as mentioned again, if they can't do 2 out of 6 activities of daily living, that $16,265 doubles to $32,500 for care. And again, their death benefit's $250, no probate. It's a relationship between the insurance company and the insured and the beneficiaries. So I talked about a client of mine that had a pretty good return a while back. This client came to me. This is an old statement, but it's a huge story because I've never seen in my 23 years a return on an annuity this high before. They bought this in 2020. This lady did after her husband passed away, and she started the account with $286,000. She added to that in the first year $71,426.13. She had a total interest credit of $37,900, so her ending account value after the first year was $402,000, $402,619.99. If we look at that, how did it actually perform? 19.68 right here, folks, is what she did in the first year. Huge. Is it going to do that every year? No. Is it nice to know that you can hit it out of the park every once in a while? Absolutely. So with that, folks, I want to end with just this last thought. I mentioned at the very beginning that if you don't specialize in annuities, but you want to sell them and you need help, partner with us. Let us show you how. This slide right here is a list of something. Well, let me back up. Every single thing you're going to get from me out at OCI is field tested. In other words, I know it works because I've done it myself. I had a Medicare shop in Nebraska one time ask me they said, Aaron, I want to start selling other lines, but we don't know what kind of questions to ask. All we sell is Medicare. And I said, well, let me ask you a question. Would it be helpful for you if I put together something that you had just some questions that you could ask folks that might kick open the doors to a conversation? They said, absolutely. And so I did this. And this sheet right here is for annuities. I've got it also for long-term care, life insurance. anything you want, disability insurance, we make this available to all of our contracted agents. So if you want this or want to know how to use it, please call me and let us get this in front of you so that you can start offering these to your clients. Again, folks, 23 years, they've never been as high as they are right now, annuity rates. Your clients are buying them. We would much rather they buy them from you. Give us a call, folks. We're at 402-330-8700. We look forward to talking with you. Thanks so much for your time today.